You're listening to AI PRISM from Seoul Economic Daily.
It's Thursday, May 14th. I'd like to share some thoughts about industry daily. Imagine running a bakery, right? And overnight, the cost of your imported flour just skyrockets.
Well, that's a total nightmare.
Yeah, well, imagine that, but on a massive corporate scale. You're rolling the exact same vehicle off your assembly line, but suddenly you are bleeding about 1.5 million to 2 million won. So that's like $1,050 to $1,400 on every single unit.
Just because of math in another country?
Exactly. And that is the kind of structural macro pressure we are analyzing for you today. We're looking at how currency shifts, geopolitical conflicts, and, strategic consolidation are fundamentally restructuring Korea's corporate landscape.
It really is a brutal reality check on supply chain exposure. I mean, Renault Korea is just the prime example of this right now.
Right.
They just posted an operating loss of 37 billion, about $25 million for January and February. It puts them on track for their first annual loss in 4 years.
Wow. So the mechanism behind that loss, it's basically tied entirely to the Yuan exchange rate, isn't it?
Yeah, completely. Renault relies really heavily on Chinese supply chains. So when that rate jumped from 189 won up to 221 per yuan.
That's a massive jump.
It is. It's roughly a 16% currency spike.
Okay.
And that translated directly into a huge raw material penalty per vehicle. It really highlights this deep structural vulnerability they have.
Right, because if you look at their domestic competitors like Hyundai or Kia, they manufacture and source major components locally in Korea.
Exactly. And that local sourcing insulates them from this specific dynamic. Renault, however, is essentially a non-Korean automaker manufacturing in Korea, but they're completely tethered to Chinese currency fluctuations.
And they can't exactly just, price hike their way out of a 16% material cost increase.
Oh, definitely not. If they did that, they'd be actively crushing their own market share.
So Renault is just getting hammered by macro exposure. But on the flip side, we've got companies riding these same volatile waves to massive profit.
Like SK Innovation.
Yes, exactly. They swung to a 2.16 trillion won operating profit in the first quarter, roughly $1.52 billion. And it was fueled entirely by the Middle East oil rally.
Right.
But let me push back on that a bit. Looking at the balance sheet, is this actually real structural growth?
Yeah.
Because it feels more like an accounting illusion for investors.
You're spot on. It is strictly an inventory windfall. It's primarily driven by what we call the lagging effect.
The lagging effect. Okay, break that down for us.
Sure. So Korean refiners purchase their crude oil weeks before they actually refine it and sell the finished product.
Right, there's a delay built in.
Exactly. So when a geopolitical conflict unexpectedly spikes global oil prices, these refiners are suddenly selling product made from older, cheaper crude at these new premium market rates.
Ah, I see. Which means companies like GS Caltex and SK Innovation, they're raking in massive margins today, but it's basically a paper margin.
Right. And both companies explicitly warn that the second crude prices stabilize or drop, this profit just evaporates. It's a temporary accounting reality.
So relying on reactive commodity swings is a pretty precarious position, especially compared to proactive market positioning, which honestly is a great transition to look at Kia's latest move.
Yeah, Kia's big return to Japan.
Exactly. They are going back to Japan after 24 years. But they aren't pushing traditional passenger sedans this time. They're launching the PV5 electric van, targeting B2B commercial fleets.
It's a really smart play.
Right. Is this essentially a Trojan horse strategy? Like targeting the commercial fleets to bypass Japan's notoriously closed passenger market?
That's a perfect way to put it. Japan's passenger auto market is notoriously difficult for foreign brands to penetrate. But Kia is utilizing the PBV, the purpose-built vehicle.
And PBVs, those are EVs designed strictly for commercial use, right?
Exactly. They were built strictly from the ground up for commercial logistics and delivery. Japan has mandated a 30% EV target for new car sales by 2030, yet their domestic automakers have been
incredibly slow.
Exactly, incredibly slow to produce electric commercial options. So Kia is exploiting that specific supply gap.
And they're mitigating their entry risk too, right? They're partnering with the local Japanese trading house, Sojitz, to handle the dealer network rather than just, building it blind.
Right. Utilizing an established local partner absolutely lowers the barrier. But, while Kia builds these niche footholds abroad to insulate itself, we are seeing a very different kind of defensive maneuver back home.
You're talking about absolute consolidation.
Yes. The formal merger contract between Korean Air and Asiana has officially been signed.
Wow, so that's really happening.
It is. They're targeting a launch on December 17, 2026.
Yeah.
This will create a top 10 global airline.
Assuming they get the final approval from the Ministry of Land, Infrastructure, and Transport, right? Because that takes Korea's full-service carrier market from 2 players down to 1.
Exactly, pending that final approval.
But how does creating this massive global airline actually protect them from the macro shocks we've been discussing all day?
Well, it's all about scale. Scale creates immense leverage. When you operate as a near monopoly in your domestic hub, you possess far more pricing power.
So unlike Renault, which just has to swallow those exchange rate penalties.
Right. A consolidated Korean Air can much more easily pass those costs on to consumers or, negotiate much better terms for dollar-denominated aviation fuel. It's basically the ultimate hedge against external volatility.
Which brings us to a really provocative thought regarding the cable, Korea's sprawling family-run conglomerates. As these corporate giants restructure to survive global shocks, whether by hedging supply chains or consolidating into near monopolies, will you, the everyday consumer, ultimately find yourself footing the bill for this structural overhaul?
That is the big question. Consumers usually do end up bearing the brunt of these massive shifts.
That's today's AI PRISM Industry Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a WAN-IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.